Welcome to the channel. I am James, and today we are looking at Advanced Micro Devices Inc., otherwise known as AMD, ticker symbol AMD. They have just released their earnings for the first quarter of 2022, and we are going to be going through these numbers right now. These have just been released, and then we're going to put these numbers in my discounted free cash flow model and the Buffer Graham intrinsic value model to give the fair value of the company right now with these most up-to-date earnings to see if the stock is a buy in 2022. So firstly, what's happening with the stock? Well, it is up to $94.75 a share, up 4% post-market, which means the market is pretty happy with those earnings. But AMD has had a bit of a sorry year, down 40% on the year to date. But if we look at the last 5 years, it's up absolutely massively. It is pretty much about where it was this time in July before it had that massive run up, and it's obviously had the massive sort of crash since the trouble at the end of the year. What's this done compared to the SPY? Well, over the last 5 years, you won't be surprised, AMD has blown it out the water, 73% to 794. Over the last year, beat the market again. Market is flat, AMD up 15%, but the only difference is year to the day, market is down 12%, AMD is down almost 40%. So what's the stock going to do next? Well, hopefully that is the question we are going to answer right now. Before we go on to this, can you please give a like on the video? It really helps me out, and subscribe if you're not already. Let's get into it. So we're looking at the latest earnings here. We have the 3 months ended, which is the previous quarter, March 21. We have the previous quarter, which was Q4, December 21, and we have the most recent quarter, Q1 2022. So first, let's have a look at the revenue. What has revenue done? This time last year, it was 3.4 billion, up to 4.8 at the end of the year, and now it is 5.8 billion. So that is a record revenue from AMD. Now, if we go to Yahoo Finance, Yahoo Finance has been giving me trouble, so if it doesn't work, I apologize right now. But we have the revenue calculated on the year. 2018, 6.4, 6.7, 9.7, 16.4 was the end of 2021. Now we have the trailing 12 months. It doesn't update on Yahoo just yet. That's why I'm here, to give you guys the information before anyone else. So what is this based on AMD's latest revenue? Well, it's actually 18.8 billion, which is record revenue. So revenue is up. Next, we want to look at the profit. How do we get profit? Revenue minus cost of sales, etc., etc. And that gives us the operating income. Just interestingly, on the cost of sales, you can see it is up 1.8 billion to 2.2. About half. So this was half, and this is slightly more than half. So they're actually generating more revenue from their cost of sales, which is excellent to see. You can see here, gross margin is sort of decreasing from last quarter, which is good. But what does that mean in terms of net income? Well, if we go down here, we have the net income, 555 million in the previous quarter. Q4, almost a billion, but we're comparing the previous quarters to each other, 786 million for the quarter. So once again, if we go to Yahoo Finance, what does that mean in terms of the trailing 12 months? Well, we go to the net income here, 337 million. Wow, they've beat these 2 years. This was the year profit, and they've blown it out the water in just a quarter. That just shows the growth this company's having. 2.4 billion and 3.1. Most recent trailing 12 months, based on these numbers, 3.4 billion. So up again, excellent to see. Now we want to have a look at the shares outstanding. Are AMD issuing more shares, or are they buying them back? Unfortunately, AMD are issuing more shares. 2.2 billion previously, and is now up to 1.3. If we go to Yahoo Finance once again, you can see that they have been steadily increasing shares. Why is this bad? Well, there's some bad and there's some good here. I'll give my usual thing. You own 1 share of a company, there's 10 shares, you own 10%. They buy back 5 shares, you now own 20%. If they issue 100 more shares, there's now 110 shares, you own a lot less. So why is this good for AMD potentially? Well, their stock price, if we go back to it over the last 5 years, has been pretty high. So if they're issuing more shares here, the stock price is up. They were getting this capital. They can use this capital to reinvest into the company. So not necessarily a bad thing if your stock's at an all-time high. You don't want to be buying them back. If this becomes a new level of support here, maybe that's a time to buy it back. But when the stock is at all-time highs, maybe worth issuing more shares. It's up to the company, and they have been using the revenue because you can see they've increased it. Now we want to look at the free cash flow statement. AMD does give us the free cash flow up ahead, but I'll just show you the calculations here how we do it. Free cash flow is cash flow from operating activities, which is this line here, minus CapEx, which is down here. Let's just go to free cash flow because AMD do it for us. What's happened with free cash flow? Well, it's gone from 832 million to 736 million in the previous quarter, and now it is at 924. Now let's go back to Yahoo Finance. This might not work because Yahoo Finance, I think everybody is interested in AMD, so they're going on it. Oh no, it just crashed before in the previous video. But here's the free cash flow of AMD, minus 129 million, 276, 777, 3.2 billion. Well, they had a record free cash flow quarter. What's it done? Well, they've got a record free cash flow trailing 12 months. 3.3 billion, which obviously beats the previous year, which will be very interesting now that we go into my free cash flow statement. So we've calculated the future free cash flows based on the averages here. We'll talk about the numbers. We'll put in some different numbers here. In fact, first, what I'll do is I'll put in the average because I think that's a little bit fairer. We calculate the future free cash flows and calculate them today's value. So what does that give us? A value of the stock? Well, it currently says that based on averages, the stock should be valued at $80 a share, which is a 12% discount. Now, why did I just edit those numbers there? Well, if you look, one of the years was pretty sort of a outlier here. The net income and the free cash flow of this year was a bit different, 30%. It was 777 million in free cash flow, 2.4 billion in net income, and the other ratio is about the same. So let's just take these as an average. This will give us about 93. We'll go on the bit lower side. We'll say 90. What does that say? It says the stock's fairly valued. And if we go take these as a complete average, you can see that the stock is probably, well, it'll be at a bit of a discount right now. Yes, $95 a share. So discounted free cash flow says the stock is about fairly valued, which is interesting. You go to this stock this time last year, it would have not been fairly valued based on discounted free cash flow. It would be massively overvalued, which just shows this company is definitely trending in the right direction in terms of profit, which is actual profit rather than just high revenues and actual free cash flow. So that's excellent to see. Now we're going to go on to the Buffett Graham intrinsic value, earnings per share, expected growth rate. This is what it takes into account. Expected growth rate of AMD is $29 a share, 29%. So I'm expecting this will be pretty high. And yes, it is $115 a share, meaning it's trading at a 70% discount. $115 a share isn't unreasonable for this company. In fact, it pretty much hit that this time in November. So it would have to get back to all-time highs to reach that, but this company has proved it can do it. And it definitely has the underlying balance statement and cash flow statements to prove this. The top and bottom lines have been increasing, and the stock is fairly valued based on discounted free cash flow, which is shocking, and the Buffett Graham intrinsic value loves it. Say the stock is somewhere in the middle. This stock could be easily worth 120. Let's see what TipRanks has. I don't have TipRanks open. Let me just quickly open that here on another screen, and we'll see what TipRanks says. I believe TipRanks will love the stock. They always do. Yes, they say it's $145 a stock, 12 buying, 5 holding, high side 200, low side 111. So TipRanks is saying no matter what you do, you're going to make money, which may be a bit too on the high side, but you can see this stock does have the fundamentals to justify that price. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already, and I'll catch you guys next time.